Gautam Trivedi is joining in with more details on his biggest takeaways coming in from the budget. Hi Gautam, always a pleasure to welcome you on NDTV Profit. What are the top
Hi.
highlights for you?
Yeah, so I think the expectations from the budget this year were high given the state of the economy. The economy is coming out of a slowdown that's been around for the past 24 months. Government's taken significant steps to try and get the economy out of that situation. We're seeing the first signs of that post the GST cuts in late September. But I think it's early days. We haven't seen the full results season end. So I think expectations were high on that front. The second, of course, were expectations with respect to the capital markets, especially given what's been going on, for the past about almost 15 to 16 months. The equity markets really haven't done much. So, what I tell people is that despite $88 billion of retail flows into domestic mutual funds and insurance companies, the last 15 months have been actually brutal and very, very challenging. So I want to pause here, but that's really where I'm coming from. That the expectations were high given the state of the economy and the equity markets.
The expectations were very high there, Gautam, and probably the budget also focused on the futuristic growth agenda, and a lot of vision document was spelled out by the finance minister. When we look at some of the sectors and critical areas where the budget has really focused, where we need to build our resilience against the world, what do you have to say about that and the key highlights over there?
Yeah, I think the evidence of that to some extent which the foreigners clearly don't seem to see is the fact that the FPIs have been selling nonstop. I mean, we saw at 2025 about $18.5 billion of net FI selling, followed by almost $4 billion this in the month of January. So, year to date also it hasn't been very good. So as a result, I think the perception in the outside world, again, I think fiscal consolidation is something which the government is clearly sending a very strong message to the world, and not just the rating agencies, but also to the world. But the fact is, the earnings growth has to come back. And that, when you have a high valuation as high as, we are today the most expensive large equity market in the world at 23 times 1 year forward earnings, you've got to have earnings growth to support that valuation. And when you have others within the Asia region, which are growing at a much faster clip, I mean, I'll tell you for 2026, calendar 2026, consensus earnings growth for Korea is 69%, believe it or not. And this is a market that gave a dollar return last year of 75%. For China, Hong Kong, and Taiwan, it ranges from 14 to 16%. So I'm saying we're not alone with a double-digit expected earnings growth this year. There are other markets which are stronger and are trading at significant discounts to our valuation.
That's right, and you spelt out many of those aspects. But here, Gautam, two important aspects. One is what will improve the foreign investors' trust on India. And the second one is also going to be, with the borrowing that has been spelt out, our interest and capital costs are set to also increase. So how are these two aspects and the niggling worries that can be really tackled?
Yeah, I think you raise a very good point, Nisha, that
Yes.
as the government ends up borrowing more, will put significant pressure on the debt markets. So yes, that's a reality that we'll have to live with, because the government, for the past several years, unfortunately, has been bearing the burden of doing Capex, the private sector Capex, outside of the top maybe 5 to 10 large business houses, industrial houses. We haven't seen Capex come in, which means the burden of Capex, unfortunately, still rests on the shoulders of the government of India. So for that, they have to increase borrowings. And I think that's going to be, unfortunately, a collateral damage, if I can call it that, for the economy. As far as the FII community is concerned, I think the correction of the rupee, I hope, is now behind us, because the fact is, given the sudden fall of the rupee from October onwards, has really spooked a lot of the FIs that I speak to. And the fact is, until the rupee doesn't find a bottom, don't see FIs coming back necessarily in a hurry.
Right. So that's a double whammy, in fact, and also that is more like a vicious circle, Gautam, the point that you raised, because FII
Yeah.
outflows is putting pressure on rupee, and rupee, depreciation is also giving a concern about the economy to the FIIs to have enough
Yeah.
comfort in investing. So that's a vicious circle, and the RBI is comfortable with rupee falling to at least a certain level. Last we heard was 92 to a dollar. Up to that, they are okay given all the macro factors. All right, so looking at all of this and the various aspects all digested from the budget, now Gautam, what are the critical concerns and challenges do you think that the economy is facing where the government can probably also look at besides budget, because reforms have been actually ongoing? They pushed the
Yeah.
consumption with the GST cut in certain categories already. So a large part of work was done outside the budget as well.
Yeah. No, I think that's another good point, Anisha, that what else can the government do and what are the pressing issues today? I think the pressing issues are clearly, as you mentioned, currency is number one. Hopefully that brings back FII investment. But again, that's very specific to the equity markets. It doesn't directly impact the economy, but it does help IPOs and follow-on QIPs where foreigners put money and help Indian corporates raise capital for hopefully more Capex. That is one. Secondly, I think the issue with respect to unemployment, and we've seen even in the West, companies are starting to cut back with the advent of AI, and as AI gets more intelligent, more smarter, the risk of that flowing through into the Indian IT services, Indian BPO market, and causing unemployment, I think is a very big worry. Experts that I speak to talk of anywhere from 12 to 18 months before that's going to hit us. My personal recommendation to the government would be to focus on the tourism sector. I think we attract a very small number of tourists every year with respect compared to what we can and what we should be doing. We can do multiples of the 9.5 or 9.6 million foreign tourists that came in. Of course, domestic tourism has exploded, which now accounts, I believe, for 80% of total tourism spend in the country, total tourism revenue, which is great news. But we still need more hotels, more better quality of infrastructure to access a lot of the tourist sites, not just religious tourism, but just otherwise overall tourism. And for that, the government needs to incentivize the hotel industry, which I think is long overdue. I'm just giving an example. How about giving a 10-year tax holiday for all new hotels once they're commissioned? I mean, that would really spur investment into the tourism and hospitality industry.
Right. So many, aspects have already come out, Gautam, in the budget around tourism and around
Yeah.
supporting tourism, and especially in areas which can really economically be spurred because of the natural beauty and tourism as well. So that particular aspect has been actually applauded by most of the industry participants. Finally, when we
Yeah.
look at the job creation aspect, which you briefly touched upon, that could be a very worrying concern for the government and for the economy going forward. We saw
Yeah.
recently the big debate on gig workers, where a lot of politicians did put forth their point of view that probably we are not utilizing our next generation in more cerebral work, more
Yeah.
qualitative work, but there is no job creation also taking place on the other hand. What is corporate India really doing for skill development, skill work, job creation, and also better pays and increments and better livelihoods as people progress in their experience and their needs?
So I think the underlying issue really is with respect to consumption and domestic demand. Until domestic demand doesn't come back in a formidable way and capacity utilization levels don't edge beyond 75, 80%, you will not see corporate India doing more capex. So it's a vicious circle where consumption will drive utilization levels. Utilization levels, as they get higher, will will drive private sector capex. So, as I said earlier, we unfortunately India's put the burden of capex on the shoulders of the government, which is unfair. The government's been trying their best to encourage private sector to do more capex, opening up the economy and FDI to new sectors. Nuclear being obviously a new one. EMS, of course, you've seen a lot of investment coming in. Renewable energy has been massive. So I think the government's doing all the right things. Of course, data centers, semiconductors, and along with data centers, you need power, because otherwise, as much as we may want to be the data center hub of the world, without power, that dream can't be fulfilled. So a lot of these are connected to each other, and the government's done a great job in the budget. The FM's rolled out a whole bunch of incentives for EMS data centers as well as the semiconductor industry. I think my personal biggest takeaway from this budget really was the tax holiday between now and 2047 for data centers, which is fantastic. Of course, we have to read the fine print to see exactly what's the detail in it, but at first blush, it looks very good.
That's right. It has uplifted the prospects of data center, Gautam. In fact, that was one of the key highlights for me as well, where the MNC firms can provide cloud services to Indian companies by using Indian data centers. So that's a big push coming in with that tax holiday given for these particular eligibility criteria. But you rightly mentioned about the energy requirement as well. And many world leaders from the tech field have also said that now the tide has turned towards the power being in the hands of the ones who has the cheapest source of energy. Where are we in energy is going to be my one pivotal question also. A few bits and pieces already there in the budget. Nuclear energy given a lot of heft also in terms of input holiday coming in for this particular space. Overall, energy and energy transmission and also transformation into renewal and the thrust given by the government.
Yeah, I think the government's basically, and I think this is directly under the leadership of our Prime Minister Modi ji, where he's clearly spelled out the need for more power generation. And along with that, of course, comes transmission, comes distribution, and all the ancillary industries around it. So for you to, it's one thing to give a tax holiday to data centers, but if power is inadequate or not 24/7 and reliable, data center companies, the world's biggest data center companies, are going to, skip India, right? So we are at a point where the government has incentivized the renewable energy industry to an extent that 50% of our energy needs are now met by renewables. We're the third largest producer of renewable energy, overtaking Germany as well. So
right, your point well
taken,
Gautam, and all good points. Thank you so much for joining us.